Well, we're starting the show a little early. This is closing bell, and that's a blowout number from HDFC that we're seeing for the fourth quarter. It's a big beat. The net profit number that we were working with was closer to 3,800. They have delivered something in excess of 4,400. It's a biggie coming in. Of course, we already had the business update, so we had a fair enough idea in terms of the business growth. And we were looking at the slight dip in the margin. That was what was anticipated, a decline of about 20 to 25 basis points, depending on the street estimates you're looking at. Let's see once we have more details on the AUM, because the poll that we have, Abhishek's numbers, threw up an expectation of about 11% growth on the AUM year on year and about 3.7% sequentially. But that profit beat is extremely handsome. By the way, the provisioning has gone up as anticipated, but clearly it is an operational performance that's led to this kind of a handsome beat at the bottom line level. That's the number that we have. The rise in provisioning, it's not too much for a book as large as HDFC, and it is also on expected line, so that's not much to worry about, at least as of now. Okay, now we're getting some more details. Total income, 35%. We, by the way, are expecting an NII, net interest income growth of closer to about 9.5–10%. Right now, we don't have the exact NII number, so waiting by for that. And also looking at the AUM picture, assets under management expected to be about 10 to 11%. That's a sharp increase coming in on HDFC. The market itself has been marching away rather nicely. We have taken out the high of the earlier part of this week. The Tuesday high was around 18,180, and now the momentum is really beginning to build up. And this number from HDFC is only adding to the bull's party, so to speak. So that stock obviously is a big mover on the way up. In addition, the bank nifty itself, with SBI, for instance, HDFC Bank, these were the the financials that were anyway leading things higher. The bank nifty itself is up about 0.5% as we speak. Bajaj Finance, by the way, doing very well. A lot of NBFC stocks, in any case, getting a rub-off effect from the fact that bond yields have cooled off. Remember, the benchmark bond yield this morning fell below the 7% handle as well. So that rapid decline in bond yields anyway has been a big sentiment booster for NBFC stocks. And this HDFC number is a solid show from the large lender. Abhishek is here. Abhishek, that's an absolute blowout number on the profitability line. What are you picking up?
Well, operationally, a very strong quarter for HDFC Limited. Take a look at the interest income. That growth has surpassed the interest expenses. So there was fear that, net interest margin can compress on a sequential basis because cost of funds will rise. However, the interest income has been pretty solid. It's grown by 6.7% on a sequential basis when compared to 5% growth that you are seeing on interest expenses side. So the yield is better over here. That is why you are seeing net interest income jump of 10% on a sequential basis. We were working with a number which was 5% lower to what they have reported. 5321.5 crore is the NII, which is a growth of 15.7% YY and about 10% sequentially. So operationally, it's a strong quarter. The operating profits are at 5,836 crores, which is up 16.2% YY and about 17% sequentially. They have reported a strong profitability as well. So the profits are at 4,425 crore, which is more than 15% from our poll. In terms of asset quality, that's seen an improvement. Gross NPA ratio is down to 1.4% when compared to 1.5% in the previous quarter. Even the net NPA is actually down to about 0.7%. So operationally, it looks like a strong quarter that HDFC Limited has had in Q4 FY23. Back to you.
Okay, all right, Abhishek, thank you very much for that. So it does seem like the net interest income itself is probably a beat, as Abhishek explained, driving that huge bump up on the bottom line. Profitability numbers way ahead of expectations. I think in a bit